Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 1st, 2025, and we're diving into Air Products' latest earnings report for the second quarter of fiscal year 2025. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Air Products, a leader in industrial gases, has just released their Q2 FY25 results, and there's a lot to unpack, especially with the strategic shifts and financial adjustments they've made this quarter.
Revenue and profitability overview. Let's start with the top line. Air Products reported sales of $2.9 billion for the second quarter, which is flat compared to last year. However, the company posted a net loss of $1.7 billion. John, can you explain the factors behind these numbers?
Absolutely. The flat sales are a result of offsetting factors. Higher energy cost pass-through and pricing were balanced by lower volumes and unfavorable currency impacts. The significant net loss is primarily due to a $2.3 billion after-tax charge related to strategic business and asset actions, including project cancellations and cost reduction measures.
And what about their adjusted earnings per share?
The adjusted EPS came in at $2.69, which is a 6% decrease from the previous year. This decline is attributed to lower volumes and higher costs, although it was partially offset by favorable pricing, especially in non-helium merchant products.
Strategic initiatives and charges. Air Products has made some significant strategic moves this quarter. Can you tell us more about these initiatives and their financial impact?
Sure. Air Products decided to exit 3 major U.S. projects, including the World Energy Sustainable Aviation Fuel expansion. These exits, along with other strategic initiatives, resulted in a substantial charge of approximately $2.9 billion. Additionally, Eduardo F. Menezes was appointed as the new CEO, and the company increased its quarterly dividend to $1.79 per share, marking the 43rd consecutive year of dividend increases.
How do these strategic decisions align with their long-term goals?
These moves are part of Air Products' effort to streamline operations and focus on projects that enhance shareholder value. The leadership change and dividend increase signal a commitment to stability and growth, despite the current financial setbacks.
Segment performance and market dynamics. Let's delve into the performance across different segments. How did Air Products fare in its key markets?
In the Americas, sales increased by 3% to $1.3 billion, driven by higher energy cost pass-through and pricing. However, operating income decreased due to higher maintenance costs. Asia saw a slight decrease in sales to $774 million, impacted by unfavorable currency and lower helium pricing. Europe, on the other hand, experienced a 9% increase in sales to $727 million, thanks to higher energy cost pass-through and pricing.
And what about the Middle East and India?
The Middle East and India reported a 6% increase in equity affiliates' income, primarily due to strong performance from an affiliate in Saudi Arabia. This region continues to be a growth area for Air Products.
Guidance and future outlook. Looking ahead, what guidance has Air Products provided for the rest of the fiscal year?
Air Products has revised its full-year adjusted EPS guidance to a range of $11.85 to $12.15, with third-quarter guidance between $2.90 and $3. They also expect capital expenditures of approximately $5 billion for fiscal 2025, focusing on clean energy projects and strategic investments.
How does this guidance reflect their strategic priorities?
The guidance underscores Air Products' commitment to investing in clean energy and sustainable projects, which are expected to drive long-term growth. Despite the current challenges, the company is positioning itself to capitalize on emerging opportunities in the energy transition space.
Key takeaways. In summary, Air Products faced a challenging quarter with a significant net loss due to strategic charges, but they continue to focus on long-term growth through clean energy investments. Their adjusted EPS of $2.69 fell short of the forecasted $2.84 by analysts. However, the company remains committed to shareholder returns with a dividend increase and substantial capital expenditures planned for the year.
Indeed, while the short-term results are impacted by strategic decisions, Air Products is clearly focused on aligning its operations with future growth opportunities. Investors should keep an eye on how these strategic shifts play out in the coming quarters.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Air Products' performance in the comments below.